Many of you have asked me about my opinion on Adobe stock, if I believe it's presenting some kind of a generational buying opportunity at this price, as it's down more than 26% over the last year, or maybe it's some kind of a value trap and we should wait for a much lower level before considering buying Adobe. That's what I'm going to talk about. And I'm just being honest, I've been more bearish than bullish on Adobe over my last videos. A lot of you guys know me for that stuff, but that's what I do on YouTube. I'm not 100% bullish all the time. Most channels on YouTube, they're always bullish. They never bearish on a stock because they don't want people to be upset about them. They don't want people to disagree with them. But I'm not that kind of person. I'm very honest. Like, I tell you the truth. Sometimes I'm bearish on certain stocks. I don't like the stock. And I tell you, I don't like it. Like, that's just the way it is. And I just tell you the truth. And there's a lot of things I like about Adobe, but there's a lot of things I don't like. And I'm just going to give you my opinion and let you know if I believe it's interesting here or not. Now, a lot of you are familiar with the products of Adobe and what they do and many different things. And it's an amazing company, and they're very dominant in a lot of different niche markets, we should say niche industries. And they own the popular PDF where we all use. It's an amazing company, amazing business model. The last earnings report was pretty good in my opinion, up 11% in revenues, earnings per share up 17%, amazing stuff. Operating cash flow up 83% year on year. This is an amazing report. But the stock still went down. And the main reason the stock went down was because of guidance. And the analysts, they were expecting 5.73 in terms of revenues for 2025, and Adobe guided 5.63 to 5.68. So it was slightly below analyst guidance, no big deal. It wasn't that huge of a big deal. But the main reason why the stock went down was because it was priced to perfection. The stock was very expensive. Now it's getting much more reasonably priced, I have to admit, I have to be honest. But before that, it was priced to perfection, and that's what happens to a lot of those tech companies. Whenever they're priced to perfection, any kind of disappointment is going to cause massive move to the downside in the share price. And we've seen it with Netflix before, and we've seen it with many different companies. But as I said, Adobe, I love the business model. I have to admit, I'm going to talk about the good things. I'm going to talk some of the bad things. But I love the business model. Over 93 or 95% is like subscription-based revenue. You could see it. 5.3 billion out of 5.6 is subscription recurring revenue, high margin, stuff. Most of their expenses is like on sales and marketing, So their expenses are very low. They have the product and they just keep selling it over and over. It's just a beautiful business model. I love the business model. Very good stuff. They have a good balance sheet in general. In total, cash and cash equivalent short-term investments around $8 billion. They do have some debt, but that in terms of short-term debt, like $1.5 billion, longer-term debt is 4.1. So they do have a net positive cash position. So it's a good balance sheet, and they have positive cash flow, amazing cash flow for the company, amazing stuff. They have over 38% net income margins. This is unheard of, very high margin. I believe much higher than Microsoft. If I'm not mistaken, Microsoft's like 34%. Adobe has 38% net income margins. That's absolutely insane. Very high return on capital, over 38%. So the business model couldn't be better. It's an amazing business model. So the question is, why wouldn't you want to invest in Adobe? Well, there's a few reasons. I'm going to talk about them. No stock is perfect. Every stock has a few reasons. I'm going to talk about the first one. This one is a little bit funny, but I just have to mention it because a lot of people did not talk about it. And that was just mainly on what happened on, I believe it was on Black Friday. And this is someone in my own group on my Discord. He pointed this out, and I looked it up on Reddit, and people were taking advantage of it. And this is mainly if you have an account with Adobe and you signed up for one of their products, all you have to do, you click on Manage Plan, you cancel your plan, and then you continue, and then you suddenly get this offer. Even though you are a previous customer, you just cancel your plan, you get a new offer. Instead of paying $60 a month, you pay $30 a month. So you get 50% off for the first year, even though you are a customer, and they even refund you on your last payment. A lot of people, they took advantage of this and they saved a lot of money. And this is absolutely insane. That was a big mistake from the company. A lot of people saved a lot of money. It's going to cost them millions and millions of dollars. I don't know how much it's going to affect them, but this is a big mistake from a multi-billion-dollar company. And this is a huge deal, 50% off for the first year. So if the demand was so huge for Adobe, why would they be making such amazing deals? I'm just being honest. I don't know if that happens every single year. I haven't been monitoring it, but this is something to pay attention to. I'm just being honest. The second one is AI, of course. I have to admit, I don't use a lot of Adobe products. I'm not an Adobe expert, but a lot of people told me that AI has been taking market share from Adobe in a lot of different areas, in a lot of the marketing stuff, creating figures, creating ads, creating certain pages and layouts. A lot of the AI tools right now, they can do that stuff. But of course, Adobe still has a place. People are still signing up. They're still growing in revenues. It's not like it's dying. People say Meta is dying. It has no moat. PayPal is dying. It has no moat. Now people are starting to say Adobe is dying too. I don't believe it is. But AI is catching up. I'm just being honest. Maybe 5 years from now, it's also going to be much, much stronger. It's going to take much more market share from Adobe. And I'm not an expert to really know how much it's going to take market share from Adobe, but this is another risk that you have to pay attention to, and you have to factor in your valuation model instead of believing that Adobe is going to revert to where it used to trade at before. You have to factor in the AI risk. This is very important. Now, looking at the PE ratio, it's trading at 22 times forward earnings. This is dirt cheap. Now, the mean was 33 times. It traded as high as 51 times and as low as 18 times. Now you could buy it for 22 times earnings. The only problem is that Adobe isn't really trading at 22 times earnings. Why? Because of the massive stock-based compensation. If you look at stock-based compensation, it was $1.7 billion out of $7.3 billion of cash from operation. This is massive, massive stock-based compensation. Another way you can see it is from the difference between GAAP and non-GAAP EPS. Non-GAAP EPS was 20.43 cents. And this is what's used to get the 22 times forward PE. Now, if you use the 15.97 cents for GAAP PE, Adobe isn't trading at 22 times, it's trading at 28 times earnings. So it does not look as cheap as it is. But even if you use the non-GAAP PE ratio, I'm just trying to be fair, I'm just being honest, Adobe at 22 times is not expensive at all. For 93% recurring revenue, positive cash position, they're still growing 10%. They're likely going to grow 10 to 12% in EPS for the next 2 to 3 years. 22 times earnings is not expensive at all. And from here, personally, I'm not really seeing a huge multiple expansion. I would not bet on Adobe going back to 30 times non-GAAP. 30 times non-GAAP is like 38 or 40 times GAAP. This is very expensive. Now with AI risks and all that stuff, I'm just being honest, I wouldn't bet on it. But if I was buying Adobe here, I would not expect more than 12 to 14% kind of annual returns from here. Something pretty close to the EPS per share growth, 12 to 14% annual returns. This is what I would be expecting. So for me personally, I'm just being honest, assessing the risk reward, I would say Adobe is a buy over here. And it's getting very, very interesting for people that really want to own Adobe. Now, for me personally, I'm not dying to own Adobe. I think there's much better opportunities in the market with companies that actually have tailwinds, that have long-term tailwinds that's going to boost earnings per share. Adobe does not have long-term tailwinds. I believe AI is going to take from them. They're not going to help Adobe. It's going to take from Adobe. I'm just being honest. So for me personally, Adobe is a buy if you really like the company. But for me, I'm not dying to own Adobe, so I'm not buying the stock. I'm just being honest. Like Google was a much better buy a few weeks ago. There's much better buying opportunities that could deliver the same returns, if not a little bit more, especially as the market is going down. And this is just my opinion on the stock, not financial advice. Hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.